What if I told you that while millions of Americans are struggling to pay their bills, the stock market just hit another all-time high? It sounds insane, right? But here's the truth that Wall Street doesn't want you to know. There's a hidden river of money flowing through the American financial system, and it's creating the biggest wealth gap in modern history. Stay with me, because in the next 10 minutes, I'm going to reveal how this secret liquidity machine works, who's really benefiting from it, and why your financial future might depend on understanding this right now. Let me start with a story that will blow your mind. In 2023, while inflation was crushing everyday Americans, billionaires added $1.5 trillion to their wealth. Think about that. The same year your grocery bill doubled, the ultra-rich got exponentially richer. This isn't a coincidence, it's by design. So what is this hidden liquidity everyone's talking about? Simply put, it's money that exists in the financial system, but does not show up where you'd expect it. It's not in your bank account, it's not in small business loans, and it's definitely not helping the middle class. This liquidity is trapped in a parallel financial universe that only the wealthy can access. Here's how it works. When the Federal Reserve wants to stimulate the economy, they inject massive amounts of money into the system. We're talking trillions of dollars. You probably heard about this during COVID, but here's the catch. This money doesn't flow equally to everyone. It flows first to big banks, massive corporations, and institutional investors. By the time it trickles down to regular people, if it ever does, its value has already been captured by those at the top. Let me break down the mechanism. The Fed buys government bonds and mortgage-backed securities from banks. This puts cash directly into the bank's reserves. Now, these banks are supposed to lend this money out to businesses and consumers, right? Wrong. Instead, they park huge portions of it in what's called reverse repo agreements, earning risk-free interest from the very same Federal Reserve. It's literally free money for doing nothing. Meanwhile, this ocean of liquidity creates a bizarre situation. Asset prices soar, stocks reach record highs. Real estate becomes unaffordable. Luxury goods fly off the shelves. But the actual economy, the one where real people work real jobs and buy real groceries, is struggling. Wages aren't keeping up. Debt is mounting. The American dream is slipping further away. You might be wondering, why does the stock market keep going up if the economy is struggling? Here's the secret. The stock market isn't the economy. Let me repeat that. The stock market is not the economy. The stock market represents the value of large corporations, and these corporations have direct access to that hidden liquidity I mentioned. They use cheap, borrowed money to buy back their own stocks, artificially inflating their share prices. They invest in automation and AI, cutting jobs while boosting profits. They exploit global supply chains to maximize margins while paying workers less. This is why you see this crazy disconnect. Unemployment might be rising in your town, but Apple just hit a $2 trillion market cap. Your neighbor's small business just closed, but tech stocks are soaring. It's two completely different worlds running on two completely different fuel sources. Now, let's talk about the money printer. You've probably heard the phrase, money printer go brrr online. It's a meme, but it's also frighteningly accurate. Since 2008, the Federal Reserve has expanded its balance sheet from under $1 trillion to over $8 trillion at its peak. That's 8 times more money created in just 15 years. Where did all that money go? Here's where it gets really interesting. This newly created money flows into what economists call the Cantillon Effect. It's named after an 18th century economist who observed that when new money enters the system, those closest to the source benefit the most. The money loses value as it spreads outward. So banks and financial institutions that receive this money first can invest it before prices rise. By the time the money reaches regular workers through wages or small business loans, inflation has already eroded its purchasing power. This creates a hidden tax on everyone who isn't connected to the financial system's inner circle. You work hard, you save money, but that money is worth less every year. Meanwhile, those with assets, those who own stocks, real estate, and businesses see their wealth multiply because asset prices inflate faster than consumer goods. The rich get richer, not because they're working harder, but because they're positioned in the right place in the monetary flow. Let's talk about corporate debt. American corporations are sitting on record levels of debt, over $10 trillion. In a normal economy, this would be terrifying. Companies would be cutting costs, laying off workers, preparing for bankruptcy. But with hidden liquidity, cheap debt is everywhere. Companies can borrow at near zero interest rates, use that money to invest, expand, and yes, buy back stocks. As long as the liquidity keeps flowing, they can keep refinancing their debt forever. It's a house of cards, but it's a house of cards built on an ocean of printed money. Here's what really keeps me up at night. This system is unsustainable. You cannot print unlimited money forever without consequences. History has shown us this again and again. Weimar Germany, Zimbabwe, Venezuela. When you divorce money from real economic value, eventually something breaks. The question isn't if, it's when. Some economists argue we're already seeing the cracks. Inflation, which was supposed to be transitory, became persistent. Interest rates had to rise dramatically. The fastest increase in 40 years. Banks started failing. Remember Silicon Valley Bank? That was a direct result of this liquidity game. They invested deposits in long-term bonds when rates were low, then got crushed when rates rose. Billions vanished overnight. But here's the paradox. Even as the Fed tries to tighten, to remove liquidity from the system, markets keep finding hidden pockets of money. Money market funds hold over $6 trillion. Corporate cash reserves are at record highs. Wealthy individuals and institutions are sitting on unprecedented piles of cash, waiting for the right moment to deploy it. This dry powder, as it's called, keeps asset prices elevated even when economic fundamentals suggest they should fall. So what does this mean for you? If you're an average person, you're caught in the middle of a financial war you didn't even know was happening. Your savings are being devalued. Your wages aren't keeping pace. The assets you need, housing, education, healthcare, are becoming less affordable. Meanwhile, if you're not invested in the market, you're missing out on the one thing that's actually growing: asset prices. This is why financial literacy has never been more important. Understanding how this hidden liquidity works is the first step to protecting yourself. You need to think like an investor, not just a worker. That doesn't mean gambling on meme stocks or crypto. It means understanding that in this system, holding cash is a losing strategy. You need assets that appreciate with inflation, stocks, real estate, commodities, skills that can't be automated. But beyond personal finance, we need to ask bigger questions. Is this the kind of economy we want? One where the stock market and the real economy are completely disconnected, where the wealth of nations flows to fewer and fewer hands, where hard work doesn't guarantee prosperity anymore? These aren't just economic questions, they're moral ones. The secret of hidden liquidity in America is that it's created a two-tier system. One tier for those with access to capital, leverage, and financial instruments. Another tier for everyone else, struggling with rising costs and stagnant wages. The tragedy is that most people don't even realize which tier they're in, or that the tiers exist at all. As we move forward, keep your eyes open. Watch how the Fed responds to the next crisis. Watch where the money flows. Watch who benefits. Because now you know the secret. The game is rigged, but it's not invisible. Once you see the hidden liquidity, you can't unsee it. And that awareness is the first step toward either playing the game better or demanding that the rules change. The markets might be at the top, and the economy might be in crisis. But now you understand why. The question is, what are you going to do about it?